In this video, we'll take a look at the future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you're interested in learning trade Forex like professional, check out our complete Forex training course on Udemy. I have the link attached in the description below as well. So in this video, we're talking about gold, Bitcoin, crude oil, and GBP-USD. So starting with the gold chart on the 1 hour time frame, we'll take a broader look at the current price action, taking out these green zones. You can see that gold has been in a symmetrical triangle without a clear direction as to where we're going to get our breakout from. So we may either break below, so giving us a bearish breakout from this symmetrical triangle, or we could get a bullish breakout in continuation of the overall bullish trend we've seen over the past few months. So bringing back our area of values, so if we do get a bearish breakout to the downside, these are potential area of values where I think we may see price get stalled before a continued price movement, either a bounce or a continuation of a bearish movement when we do get that breakout from this symmetrical triangle, if indeed the breakout turns out to be a bearish breakout. So right now, last week we had this breakout from this wedge. So there's a falling wedge, right? Falling wedge or descending channel. Falling broadening wedge is the most appropriate description for this pattern, right? So within our symmetrical triangle, we had a good bullish breakout, and we anticipated a continued move all the way to the top of the symmetrical triangle, but that didn't happen. For some reason, the price of gold has stalled, giving us more room for consolidation, and now we seem to be gearing up for another move to the upside. So this is going to be like the second try. So the first try was breaking out from this trend line over here, attempting to go all the way to the top of the symmetrical triangle. It failed, giving us more consolidation. So this consolidation, right? So we had this move. You see this consolidation over here, right? Similar to what we had here. We had a move, consolidation over here. So this price action for you. So repetitive price pattern that simulates past price action, right? That's what price action is all about. So you can see after this consolidation and a good breakout from this trend line, we had a move to the upside. So I expect similar pattern. So a break from this pattern over here, this consolidation, I expect a move to the upside. So how high are we going to go? That's yet to be seen. But I do think this time we're going to attempt aiming for the higher bounds of the symmetrical triangle, which gives us, an opportunity to go long right now when the market opens, right? So we have had our consolidation. Excuse me. So we've had our consolidation. So zooming in, we've had our consolidation, which is what we had over here, like this, like this, like this, like this. Partly, most of this movement was as a result of fundamentals from last week, right? But right now, since that's all over, I do think there's a good chance we bounce, maybe get a quick move to the downside and bounce up here, and then all the way to the top of the symmetrical triangle. So this is my bullish case scenario for gold. And I'm currently on these trades already. My stop loss is placed under this low. So if we do get price coming below this lows, then I would suggest that this pattern would therefore be invalidated, right? Giving room for more opened, analysis to decide if we're going to go down or go up either ways. So right now, I do think the best course of action is see what price does when the market opens. Like I said, I went aggressively when we took out this trend line, so I'm already in on this trade, right? And if we do get a small pullback, right, followed by a bounce, that should also be a confirmation for you to go long if you indeed want to go aggressively. So if you want to go conservatively, something to watch out for would be waiting for a consolidation, right? So a consolidation, so more consolidation over here, followed by a breakout, right? So if you wait for something like this, so you will get a slight resistance over here, then your entry would be after the breakout. So if we do get a good, a small consolidation above this trend line, followed by a breakout, then this is how you should play the position. The stop loss will be under this lows. If this happens, take profit can be as high as this place. Yeah, first take profit, while second take profit could be at the top of the symmetrical triangles. This is how I'm going to play this conservatively, considering the setup looks bullish right now, as the case may be. So this is one way to see it. Second way is to go long immediately when the market opens, and stop loss being placed on any of these lows. But that's very risky. except you have a very solid risk management strategy, right? So that's my recommendation for a bullish case scenario right now. There's a good chance, right? There's a good chance we also retest this trend line, right? So the good chance we retest this trend line followed by a bounce to the upside, right, leading to the top of this symmetrical triangle. So after a bounce from this trend line, right here, we could also have a good opportunity to go long with your stop loss placed underneath these lows. This is the safest place to place your stop loss without invalidating the setup, right? Without taking on too much risk. So if your stop loss is nailed at these price levels, then it means the setup is probably invalidated, or you want to get out of the positions to get more clearer picture of the market before going long, right? So this is how I'm going to trade gold, right? If I wasn't in on the trade already. So these are the few options I have, right? If I want to go conservative, I want to go aggressively. But for me, I already went aggressively on Friday. I'm just waiting for the market to open, see what happens, and then follow up accordingly. So that's my bullish case scenario. So now what do we do for a bearish case scenario? I know there are bears out there, and it wouldn't be fair to them if we don't take a look at the downside of the picture. So for a bearish case scenario, you want to expect, or you want the price of gold come down, nailing this lower bounds of the symmetrical triangle, consolidating a bit before giving us that final breakout to the downside, right? It could come immediately all the way down to this area of value, consolidate more, then dump more. So this is my bearish case scenario for gold. If this happens, then I think the long bullish trend for gold will likely be coming to an end, right? So this is my bearish case scenario. So then this will be irrelevant. If this happens, then your entry would be or should be placed after the breakout, stop loss above the consolidation list of the breakouts, and take profit target. First one obviously should be around this area of value. Wait for more consolidation. If we get another breakout, you can jump in again. So all these are not going to happen this week. Mind you, anything is possible though, but I don't think this is going to happen this week. We may get a breakout from this triangle this week, coming into this area of value, but I don't think we're going to break through this area of value going down this week. So maybe that will happen along the line, maybe a few weeks to come, 3 weeks to come, or 4 weeks or a month, who knows. But there's a good possibility that we dump hard, consolidating on this lower bounds of the symmetrical triangle followed by a bearish breakout. But this would only happen if the DXY tends to gain momentum. So if the DXY tends to gain heavy momentum this week, then heavy bullish momentum, not bearish momentum, then I can expect this pattern to happen. But I do think the DXY is going to get weaker, so that's why I'm more keen on the bullish case scenario for gold. That's it briefly for the gold setup. If you have questions, leave your thoughts in the comment section down below. Moving on, we're talking about Bitcoin. So Bitcoin again, last week we anticipated a move all the way from this was it last week? Yeah, I think last week. Yeah, so last week or last 2 weeks, I don't remember exactly. So we anticipated a move from this small consolidation over here. Then we haven't had this whole picture, right? And we had exactly that. TP placed at 23k for me. Woke up, nailed my TP. Now we are having another good consolidation. This structure simply tells us Bitcoin is gearing up for another bullish move to the upside, possibly all the way to $23,000, or a more psychological round figure of $25,000. So this is where I think we're headed for Bitcoin. And the best way to go long would be, I think it's obvious, waiting for price to come to the higher bounds of the this is a descending triangle, right? But it doesn't matter if it's a descending triangle and ascending triangle. What matters is the direction of the breakout after the consolidation. And in this case, I do seriously think we're going to go up, breaking out from this trend line, then aiming for those higher price targets. So this is exactly what I think is going to happen on Bitcoin, and your entry would be above these highs, right? After the breakout, your stop loss underneath the consolidation list of the breakout if we do get a consolidation, and take profit target. First one around these highs, second one around 25k. If you have more positions, you can trade them as we go higher, because then we're going to be in price discovery, right? So for me, I'm already in on this trade on Bitcoin. right? I entered around these lows. So I entered around these lows, yeah, when we scraped this area of support. And one of the reasons why I did that was pulling up our moving average. You see that the moving average has been held as a support when we broke out from this consolidation, which is somewhat similar to what we're having right now. So we see price bounce off of this area of value, right? This support level, which coincides with the 200 EMA and SMA consolidating in between. And now I think it's going to hold because the momentum on Bitcoin right now is bullish, and I don't think the bullish run is over. So I do think we are going higher, and that's why I jumped in on this price level. And my stop loss is currently placed around these lows, right? So my stop loss is placed around these lows, my entry around these price levels, and my take profit target is around this high. So first one here, second one here. If I have more positions, if I don't want to sit on my positions, I'm going to hold the rest of my position until we get to around maybe $130,000. That's briefly for BTC. So me, I went, aggressively. That's why I, jumped into that position. Mind you, I have a solid risk management. That's why I did that. But for you, if you want a more conservative, entry, then that will mean waiting for price to touch this trend line, get a small pullback, maybe then a breakout, right? And your entry would be after the breakout. Stop loss would be underneath that pullback, and take profits as I explained earlier. One here, one here. Case closed. And now what if we do not get this pullback over here, right? So there's a good chance we get a big fat candle, going all the way through like this. Very, very possible with the way things are right now on BTC, right? If this happens, if you tend to have a very solid risk management, you can still probably go long when we close above this trend line, but your stop loss would therefore have to be placed underneath these price levels, right? So you tend to have a wider stop loss because just the way the candle, moves up like that, there's also a good chance it can, go down as fast as it moves up. So that's the reason I wait for those pullbacks to give us, our exit positions when we attempt to go long. This is it for BTC. Now, not to shoot myself in the foot, there's a good chance we also get a bearish breakout, but I do think that's unlikely. But there's that probability there, and I think we need to talk about it. So I think if we get a bearish breakout, I'm going to be in trouble because there my stop loss is going to be hit, I think. So something to pay attention to, right, for the bearish case scenario would be taking this trend line, so this lows, and going across this place, right? So if we do get a bearish breakout, there's a good chance price comes back to visit this trend line. And if you move on to the 2 hours time frame, so 2 hours time frame real quick, you can see the moving average has been adjusted based on the time frame to track this trend line exactly to the T, right? So if we do get a reversal to the downside with price taking out this area of support, so mind you, price would have to take out this area of support, which is now a solid area, psychological area of value. If price takes out that level, then we tend to see price come into this moving average and possibly a bounce to the upside. So this is the only risk here right now. Only risk here right now for a bearish case scenario. But I do think if you wait to get to go short, for example, that short will be short-lived when we get to this trend line / moving average. But the reason why I think that's not going to happen is because we have a very solid area of value here, which is a solid area of support, which seems to be much more stronger right now than an imaginary area of support on this trend line or this moving average. Mind you, on the 1 hour time frame, the moving average is also supporting our current area of value, which is this area of psychological support over here. So that's why I do think we aren't going to get price, going below this area of value, though it happened here once, but you can see it stayed above the moving average, right? So that's my brief outlook for Bitcoin. If you have questions, leave your thoughts in the comment section down below. If you want to learn to take out or carry out market setup and analysis like this, check out our complete Forex trading course. I bet you're going to learn a lot, and it's going to help you navigate the market as I do. Moving on, we'll be talking about crude oil. So crude oil, real quick. Last week, I think I made a small mistake. I went short on crude oil and I didn't take profits when we got into this area of value or close to this area of value. But I did exit my my positions when we had this broadening wedge, right? So there's a broadening wedge with a bullish breakout, which eventually went to retest this long-term trend line dating back all the way to May of this year. So that's like 3 months or so. So now we had our retest and we seem to be, coming back down. As I've said earlier in the past, I do think crude oil is going down, and this validates my thesis, right? So this validates my setup. Good breakout, good consolidation. Unfortunately, we couldn't break through this area of value. We went up for a retest, and now we seem to be coming down. So I do think, right? I do think crude oil is going to come all the way down here, maybe consolidate a little or not, then get a bearish breakout to the downside, bounce again, who knows, then down. So this is exactly what I think crude oil is going to, how crude oil is going to behave, and I do think I'll be ready when this happens. So meanwhile, let's take a look at what we'll be watching out for over here to see if we can spot a good trade opportunity for the week ahead. So zooming in, when you zoom in, right? So after the retest, as we expected, or as you would expect, we had this massive rejection from this trend line, which also validates that this trend line is a solid area of value. So a lot of traders are paying attention to this trend line. So now we got that bounce off. A good point to go short would have been, when this red candle closed, right? If you go to the higher time frame, I think this will become a what's it called, a bearish engulfing candle. So let's just check that out. Let's see. So let me try 2 hours time frame, for example. Okay, no, let me see 4 hours time frame, for example. Please God, let this be. Yes. So on the 4 hours time frame, this turned out to be a bearish engulfing candle, though the body is slightly larger than the green candle, right? But it is larger, so it's classified as a bearish engulfing candle, which would have been our confirmation to go short with stop loss placed above these highs, right? So that will give you a stop loss of approximately 120 pips, which is decent in my opinion for crude oil, with your first take profit target in this area of value, which will be 200 pips. So that's a risk to reward ratio of 1 to 2 if you jumped in early, right? So that's how I would trade this if I did enter, but I didn't enter that trade. So right now, the best possible thing to watch out for, so I'm going to get rid of this trend line because I think this has served its purpose. But mind you, something to pay attention to is that we could, retest this trend line and bounce. Markets can be crazy and stupid like that sometimes, right? So there's something to pay attention to just in case. But meanwhile, let's talk about our bearish case scenario first before we talk about our bullish case scenario. So right now, taking out this trend line, I do think another possible price level to jump in would be tracking these levels, right? So if we get a good candle close below, which I think we will, then that could be your confirmation to go short. Stop loss will be placed above these highs because right now that's the closest high to the price action, and so we go short here and we hold our positions till we get to the current area of value. But before that, there's a good chance we get a pullback to the upside, right, followed by a move to the downside. So if this happens, yes, then this will be the best way to get into this trade. So you wait for a good break, possibly a retest of this trend line, and enter on the reversal. So your entry will be placed around here on the reversal from the retest. Stop loss now can be placed around its highs. But if we don't get this pullback to retest the trend line, then if you enter immediately after the breakout, so going aggressively, your stop loss would have to be placed around its highs. That's how to trade and set your targets, right? Take profit level is going to be placed around this area of value. First one and second one can be trailed as far as you can hold, for as long as you can hold your positions. But the next area, logical area of value, would be around its lows to take profits. And mind you, if you do not want to jump into a trade here, something else you could do is simply wait for price to creep into this area of value like this, wait for a consolidation, and then enter on a breakout. So either you jump in around this price level, which will give you a tighter risk to reward ratio, where not necessarily but gives you an early entry, right? Or you wait for better confirmation that we're indeed going lower by waiting for a breakout from this area of value. I think this is what I'm going to watch out for and wait for. I'm going to wait for a breakout from this area of value. My stop loss is going to be above that consolidation that leads to the breakout. I do think we're going to get a small consolidation over here before the breakout, because this is a significant area of value. And if crude oil loses this area of value, then I do think we're coming all the way down to these lows. So this would be a more logical price level to go short under this area of value. And if this happens, this will give you a risk to reward ratio of stop loss around 100 pips, which is decent. Take profit of around 400 pips. So a risk to reward ratio of 1 to 4, which is something you do not want to miss, right? So this is my bearish case scenario for crude oil, as I've already stated. And mind you, just to reiterate what I said last week, we were around this price level last week, and I told you I wouldn't be going long because I do think there's a good chance we come all the way down, and it seems that has played out as I expected. So for a bullish case scenario, right? Bullish case scenario, as I was explaining earlier on. So we're not out of the woods yet to go short. So for a bullish case scenario, there's a good chance we retest this trend line and bounce for a lift off. That is the reason why I think it is more logical or more reasonable or safer to go short when we take out this area of value, because then oh, we're on uncharted territories and we are likely going to go lower. But still trading above this area of value, anything could happen. So we could bounce off of this area of this trend line, or we could bounce off of this area of value. So we could come into this area of support, consolidate, and get a bullish bounce to the upside. This is totally possible, right? So that is the reason why the more conservative approach will be waiting for us to get into this area of value, consolidate a little, and enter, go short if we do get a bearish breakout from this area of value. But for me, I do not want to go long, because I do think crude oil long term is bearish, just because the fundamentals lying around crude oil with the United States is that the United States wants the price of oil to go down, so the price of energy can go down, says Trump, right? And when he says something, it's going to damn well do whatever it takes to make it happen. That's why I'm bearish long term. And technically right now we're getting price action to support that notion. So I'm going to go short when we take out this area of value, not before or not above, because it's safer and more conservative compared to going long, right? Or going short over here and then ending up getting that bullish momentum to the upside, right? So that's it briefly. So meanwhile, for targets, if you're going to go long, when we bounce off of this area of value, you could enter after the bounce. Stop loss will be placed under these price levels. Well, if we reverse and take out this area of value, then you'll be out of your trade, which is what you expect. So entering here, stop loss here, first take profit target over here, second one over here, and third one, if you believe, we could go as high as this price levels again. So that's it briefly for crude oil. Moving on, lastly, we're talking about GBP-USD. So I haven't talked about currency pairs in a while. So GBP-USD, this looks decent, but we are kind of like at a crossroads right now. And you can see we've had this trend line. Mind you, this is a 4 hours time frame on GBP-USD. So real quick, we had this trend line. So 1, 2, 3 good touches, and we seem to break through the trend line and now consolidating around an area of value. So two things are likely going to happen, right? One thing is likely going to happen, right? So two things are likely going to happen, excuse me. So we either bounce off of this area of value, taking out this trend line and going higher in continuation of the bullish trend, which is totally possible, or we get a nasty breakout from this area of value, aiming for these lows, consolidating, maybe going lower, right, before we get a bounce. Totally possible. And the reason why I picked this area is because we have a good area of value over here. So yes, good area of value over here, and another one over here. So these are possible price targets if we do get a move to the downside. Now, I do think the only reason why this happens is if we do get a bullish DXY. So if this week turns out to be extremely bullish for the DXY, for the dollar, then you would expect something like this to play out, because the dollar goes up, GBP-USD goes down. The dollar goes down, GBP-USD goes up. So this is something to pay attention to. So if the dollar tends to get weaker, the dollar tends to be, stronger than the, Great British pounds, obviously. But if the dollar gets stronger, it becomes the major mover in this pair, and you tend to see GBP-USD maybe coming all the way down to these lows before maybe exploding to the upside, or even these lows, depending on how strong the DXY gets. But if the DXY gets extremely weak this week, which I think is going to happen, and we're going to review that chart in a bit, I do think we're going to get a bounce to the upside. Meanwhile, you know how markets works, right? We could get a fake out. Very good chance we get a fake out followed by a move to the upside. So you have to be careful. And if you're going long, wait till, I'm going to go down to the 2 hours time frame. So if you're going to go long, you have to wait till we clearly take out this trend line, right? We move down a little, consolidate, take out this trend line and these highs, right? Take out this trend line and these highs, creating a high. That will be your confirmation to go long. And if you do go long here, for example, perhaps that happens, your stop loss should be placed under these lows. This is just the safest positions to place a stop loss. And take profit target could be as high as these highs. First one, second one, just trail it as we go higher, right? And this will give you a risk to reward ratio of, let's see, 130 pip stop loss, followed by a 200 or 300 approximately pips take profit. So that's a risk to reward ratio of 1 to 2.5 or 1 to 2, as the case may be, which is a decent trade opportunity in my opinion. So that's it briefly for GBP-USD and this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And lastly, before I forget, DXY. Let's review DXY real quick. So this is dollar strength index, and this is the reason why I feel we are likely gonna go down, not up. So let's pull up our moving average and go to higher time frames. Let's say 6 hours time frame, for example. What can you see? You can see clearly that we've been trading below this area. I'm gonna get rid of this. We've been trading below this moving average for quite some time, since February of this year, right? So since February of 2025, we've been trading underneath the moving average on the 6 hours time frame. So mind you, this is the 200 EMA and the 200 SMA. One rejection, you see, when we got here, we got rejected again. When we got here, rejected. Now we seem to be creating some sort of bearish continuation pattern, which is a bearish flag. And now you see we just tapped into this moving average, and I do think there's a good chance we repeat the same pattern, which is falling like a rock, right? And if this happens, gold, I expect gold to rise higher. I expect Bitcoin to rise higher. I expect GBP-USD, EUR-USD, AUD-USD to go lower, higher. So that's the reason why I do think you have to be careful when you look at GBP-USD, you look at gold, you look at Bitcoin, because most of these pairs and assets follow the pattern on the DXY. And if you take a look, since gold has been bullish, so since gold has been bullish, gold giving that bullish momentum, you can exactly see how DXY has been bearish, which shows you that there's some sort of connection between these two, right? So you have to be careful. And right now we seem to be bouncing off of the moving average right now over here. And if this trend line gives way, I don't think you're going to see those explosive price movement on gold and exclusive price movements on GBP-USD areas, as the case may be. But that notwithstanding, there's a good chance we also get a bullish breakout to the upside. So there's a good chance this is the time DXY breaks out from the moving average, who knows, right, and goes higher. But I don't think this is going to happen, but I could be wrong. So that's why you trade with good risk management. Don't take my word for it. Do your own analysis, follow your own setup, and just use mine as a guide. So this is not financial advice. It's just a guide to show you how I trade the financial market. That's it from me, guys, this week. See you next week.